Good evening, ladies and gentlemen. John Kelly for Options University on Friday, October 28th, 2011. Disclaimer here, trading always has been, always will be risky, but by learning what you can here at Options University, you can get that competitive edge to let your winners run and keep those losers short. The European news. I left you Wednesday night waiting for the announcement. It came out. They leveraged a deal to expand the Economic Financial Security Fund, the EFSF, to 1 trillion euros, $1.4 trillion. A haircut will be taken by the private banks, a write down of 50%, and they'll recapitalize the banks. Greek debt to GDP will be reduced from 150% to 120%, but over a 9-year period of time, not until 2012, and this will be important. We'll take a look at this here in a second. But the market's reaction Thursday morning, right through the roof. We actually went up 350 points by afternoon and retraced, closing at a plus 260. So with that announcement, Wednesday here and then Thursday, the huge move, and then a move of consolidation today. Notice that the volume was higher on the E-mini. On the NASDAQ it was flat, and in volume today was flat as well. The reality of this thing is that it's a plan for a plan. It's got more holes in it than Swiss cheese, and it smells even worse. There's a bit of contention that will have to work out down the road. There is another meeting in Cannes next week on the 3rd and 4th of November. The German Parliament passed their measure to expand the EFSF, their approval of it, as long as the European Union did not buy any more bonds from the southern European countries, the pigs. The incoming ECB president from Italy, Mario Draghi, says that he will buy bonds from the southern European countries. So there is a bone in contention there. But you'll see here shortly, they're $2 trillion short with this $1 trillion expansion in leverage. The debt of the different countries of southern Europe, Italy and Spain each are in debt $1.1 trillion. That's 2.2 total. Ireland $867 billion, Portugal $268, and Greece $236 billion, who they just took care of. The Italians and the Spaniards and the Irish and Portuguese are going to say, look, you took care of Greece, it's time to take care of us. They are a good $2 to $3 trillion short of what they need to actually take care of this. Plus the debt as a percentage of GDP of the southern European countries is growing at 7%. Whereas that's twice allowed by the agreement of the European Union Treaty. The can has been kicked down the road, is the reality of the situation. However, the market likes it, and the market's going up. The fear trade has finally come off the table. We have broken below this channel here, which was at 30 and change, now down into 25, and then below 25. We closed below 25 today, coming down to the 200-day moving average. Quite a significant change. Economic news this week, weekly jobless claims, essentially nowhere. There were 403,000, we got 402, 404,000, nothing. The home increase in sales earlier in the week translated into a pending home sales down 4.6%. It was a wash. The one good news was that consumer spending was up to 2.6%, which was triple, more than triple what it was in September. The GDP, which was an anemic 1.3% in the second quarter, is at 2.5% for the third quarter. And Michigan sentiment was up, counterbalancing the consumer confidence we had on Tuesday that was at a 2.5-year low. Stock news, Hewlett Packard announced they're going to keep the PC, the private computer, the personal computer division. TJX, Stifel announced the new price target from $60 to $70. On the downside, Bank of America was downgraded by Morgan Stanley to a neutral. Sony announced the buyout of Ericsson for $1.5 billion, and McDonald's has hit a record high. Baidu was the big surprise on earnings. Blew everybody away Thursday night. with their guidance and their sales and everything else they threw in there. Visa was a beat. Boeing, a huge beat. The Dreamliner, which flew for the first time this week, is going to be a game changer in the airline industry. They will produce Dreamliner 787s as fast as they can for 10 years. They will not be able to fill the orders. The Dreamliner is going to reduce the fuel costs of the airline that's flying it by 30%. Fuel costs of an airline, trust me, I was in the airline industry, is 1/3 of their total costs. This is a competitive edge that any airline company cannot give up to another and hope to survive. Biogen, a big beat and got approval on their multiple sclerosis drug, Caribou Ceramics, a huge beat here. Deckers Outdoor, another huge beat. And the notable miss is Whirlpool. So what do you trade of these stocks? We're going to take a look at it in the gold member section next.